Okay, everybody, it's me, Gregory Mannarino. It is Wednesday, February 16th, 2022. It's a big story this morning. Did you hear about it? Well, apparently, retail sales numbers came in way better than expected. Apparently, a 3.8% gain month over month. But what they're not telling you is, despite the fact, it's in your face here, that inflation is, it doesn't stop. It's relentless. People are borrowing beyond their eyeballs and then some just to make ends meet. I'm talking about the middle class here for the most part. Look, you know the story. Who's buying here? Who's really the people that are contributing to this big number? Well, first of all, we have to consider the fact that, again, we are in the middle of a completely new demographic. I've been covering this to the point of nauseum lately. So yeah, absolutely. You got the middle class here, whatever's left of them, continuing to borrow at a record pace. You know this: household debt, personal debt, off the charts, credit card debt. We've never seen anything like this before. Okay, whatever. But you got the well-off and the rich. They can do whatever the hell they want to do. Yeah, sure. They're going to continue to buy here. Look, all these numbers are skewed. And the way it is portrayed in the mainstream, is to make you think that everybody is rich. Everybody is prosperous. But nothing could possibly be further from the truth. You all know that. But that's the game that they're going to play. But we're too smart to fall into that trap. Anyway, with that said, let's talk about what we're going to experience later today. And I think it has the potential to move the market. As I said yesterday, we're going to hear from the Fed, the minutes from their last meeting. Okay, what can we expect to hear? Well, rate hikes, how that's going to play out, possible balance sheet reductions, which is never going to happen. Look, we are going to get a rate hike at the next meeting. There's no doubt in my mind whatsoever. Because if we don't, the market is anticipating this. The market is pricing it in. The market is ready for it. The market was ready for it at the last FOMC meeting. They didn't do it. They're keeping it in their back pocket. Okay. You know my take on this. The market is going to respond in a very positive way to a rate hike and rate hikes moving forward. That's how it's going to play out. I know a lot of people don't understand it, but that's it. Certain sectors of the market are going to do very, very well. Number one, financials, banks. So this is why I've been advocating to buy banks for quite a while. Anyway, so again, we're going to hear more nonsense and from the Fed today. And let's see what the market does. If there is a fear trade that develops out of this, in other words, if the market hears something in those minutes that it doesn't like, what are you going to see? The 10-year yield fall, dollar spike, stocks sell off. If that happens, and if you have some dry powder, you need to be buying here, people, especially, again, the banks. You want me to spell it out for you? JP Morgan, Goldman Sachs, Bank of America. Go to my website, traderschoice.net. You will see Gregory Mannarino's top stock picks. Nibble at the Qs as well. This is going to pay off big time moving forward. There's just no doubt about it. What did Morgan Stanley say? Oh, yeah, it's time to buy tech. Duh. Really? Oh, I've only been saying that for actually weeks, and finally they're coming around to it. You can't make this stuff up if you try to. But anyway, I expect one way or the other, the Fed minutes are going to move the market. Okay, so right now, let's look at the market. On the back of the anticipation of whatever's going to come out of the Federal Reserve's mouth, we have stock futures that are slightly lower. Oh, you mean the great news that we just got with regard to retail sales didn't boost stock futures? How about no? Because the market don't give a damn about it. Look, the data don't matter. It's all about easy money. How many times have you heard me say this? It's just all about freaking easy money. It ain't going to stop, okay? And it's all bullshit anyway. You know that. So, as I said, stock futures right now slightly lower. WTI crude higher by 1.5%. We're like almost 94 again, hold that thought while we're at it. I want to go back to that. Cryptocurrency is about stable. Gold and silver catching a slight bid. Dollar right now relatively flat. 10-year yield, people, remains about 2.03 last time. No surprise to you. Look, this is where it's going to settle. This is where the 10-year yield is going to settle. In this environment, this is a beautiful thing for the market. This is what it wants to see. The only thing in my view that would cause the 10-year yield to fall below 2% is going to be a fear trade. If you see that fear trade, you pounce, you strike. You know what I'm saying? All right, now look, going back to crude oil, I wrote an article for the Trends Journal. I believe it came out yesterday. It appears to me, and I'm sure to you too, looking at geopolitical events, looking at energy, okay, we are right at the beginning, in my view right now, of a full-blown global energy crisis. Look, there is no doubt, at least in my mind, and I would believe yours, that we are about to see crude oil really make incredible gains moving forward. Like I said, we need crude oil to drop a little bit, establish a new floor. Actually, we don't need this, but this is what we're going to see. And it's going to go much higher. So when we get this pullback in crude, that should really set off some alarm bells in your head. And, if you wanted to, you could take advantage of this, getting long energy, getting long crude oil via some ETF, exchange traded fund. We'll talk more about that later on. But I sincerely believe, and it looks to me that the possibility of a global energy crisis is very, very high. Now, again, think about what I'm talking about. If in fact, because all we do is move from crisis to crisis to crisis, they allow an energy crisis to develop globally, well, that's going to give the central banks of the world the ability to say, oh, it's not us. It's not us causing inflation. It's energy. You see, look, it's a scapegoat. Central banks are looking for a scapegoat here to blame surging inflation on. Again, they have to remain blameless. When was the last time, really, that you heard one of our loving, caring politicians point their finger at the Federal Reserve and say they're the root cause? They're the ones creating all this inflation. They've been deliberately inflating people on an epic scale since the meltdown of 2008. It has never stopped. Look at the Fed's balance sheet. Central banks around the world, they are working in concert to deliberately inflate. So they need a scapegoat. What better scapegoat than surging energy prices to keep people distracted, to keep their eye off the ball? You understand? That's what it is. That's all this is. It's a distraction mechanism. It's misinformation, and you all know that. So, I want to hear from you. Do you believe we are going to see an energy crisis? For a multitude of reasons. The other part of this is, as you all know, we're in the middle of an extermination of an entire class of people. What better way to get rid of them than to have a full-on energy crisis? So that gives them another thing to do. Okay, central banks, their goal is to inflate. They're not going to stop. I don't care what comes out of the Fed minutes later. It's 2 p.m. Eastern Standard Time you're going to hear from the Fed. Okay. But the bottom line is central banks in no way, shape, or form are going to stop inflating. Inflation is going to get much, much worse. A spike in crude oil to who knows what is coming. I believe we're going to see a super spike here in crude, and an energy crisis will again come, and it's going to give the central banks a scapegoat. That's what this is all about. No one is held to account anymore. You know that. Everyone gets a trophy, and no one is held to account. It's pathetic. But that's where we stand. All right, so look, in summary here, despite great economic news, yeah, right, stock futures are flat. We got this Fed meeting today. Let's keep our eyes on that. Look for a fear trade. If you see it, if you're one of my lions out here, if you have some powder dry, pounce. Pounce on the banks, especially JP Morgan, Goldman Sachs, Bank of America continue to nibble at the Qs, the triple Qs, okay? I think tech is positioned as well to do very well moving forward. Look, this market is going higher. The market is going much higher. Anyone that's telling you different doesn't know what they're looking at. There are no red flags here. You got a stable 10-year yield, a dollar that is, this knee-jerk higher in the relative strength of the dollar that we've seen as of late. Okay, like I told you from a long time ago, you can expect the relative strength of the dollar to stay high. But its absolute value is going down in a big, big way, along with surging energy prices. So there's the setup. There is the setup for inflation to continue to rip freaking higher. All right, look. But you and I, we got this covered. We have our portfolio balanced. Okay, we're on risk off assets. We can sustain whatever they want to throw at us. Any kind of financial shock, we got it. All right, we can sleep good at night. All right, with that said, people, look, this guy here loves you a lot. Please share the video, get it out there, and consider what I'm saying, and I want to hear from you. Do you believe that central banks are going to use an energy crisis to blame, or as a scapegoat, like I said, for surging inflation? Seems like a no-brainer to me. How about you? I'll see you later.